Great to see all of your faces out there. Hello, John Walrath. Thanks for waving. Waving's good. Before we get started with Ethan Hellier with the U.S. Chamber, I always like to just give a quick overview of our webpage. And honestly, today is a little bit quieter than most, which is great because it allows us to catch up on a lot of great documents. The funny thing about quiet days is a lot of our organizations, being the resource providers, have been quiet. And so all of these resources get pumped out that then we have to process and put out there for all of you. So a lot of things will be posted. US Chamber just came out with some great ones last night, this morning. So we have those posted. So I'm going to share my screen here quick. Okay, and I am in a different view because there we go. Sorry, I logged in as the host and usually Maggie's the host. So I got to adjust to being the host here. So can you see my screen over here? Hopefully. Bottom line, if you come to our coronavirus page, the big update from yesterday, come on, Mr. Computer, is we created a grid for funding. So if you come to this funding page, just because there's so many that are available, we try to create a grid view of this. So you can see the source of the fund, the name of the program, what type it is, what the terms are, eligibility, description, and then where you would go for more information. And literally, I just updated, for example, the economic injury disaster loan because the U.S. Chamber, who's with us today, has a great new piece that they put out for that. And I'm sure Ethan will be talking about that. Other big news is I come back to this main page. To be perfectly honest, we got a wowzer of a news post that came through about a good hour ago, which is Senator Schilling is not seeking re-election, which came as a surprise because she had been saying the last time we had spoken to her that she was going to be seeking re-election. So that one we're going to be taking a look at and certainly changes our fall elections there. So all that being said, funding is the number one conversation that we have with businesses right now, just understanding what they qualify for and what they do not. And so Ethan with the U.S. Chamber was really great at joining us. And I will say this, Ethan, kudos to the U.S. Chamber. And of course we love you because you have Chamber in your name, but the resources that you guys have put out are above and beyond anything that I've seen coming out of other organizations. So kudos to you guys for working hard. And I kind of credit that, if you will, to really knowing the pulse and needs of business and how to boil all the information down that you're hearing and getting it out to businesses. So with that, you're one of our go-tos. So I'll turn the floor over to you to help people get steered in the right direction.
Great. Well, I'll start off by sharing my screen so I can get a PowerPoint up. Then, all right. Does that look good for everybody? Can you see the whole screen? Okay, because I had problems before where some of the screen was cut off or whatever the case. So as long as you can see it, that's good. This hopefully will be the quietest PowerPoint I've done. Normally I have a first grade classroom to the left of me here. And then I have a dog that likes to greet everybody who comes by these front windows here. So she's in her kennel, wife's on a walk. So hopefully this will be more of the more quiet version of this PowerPoint that I've had, but let's get started here. So the Federal CARE Act passed last week and was signed into law last Friday. So just to go over a few things in it, you've probably heard it called the Phase 3 bill, which is the same thing as the CARES Act. It's just the press has picked up on Phase 3, and I think everyone else has, just because it's the third bill that Congress has passed looking to combat COVID. So it's a $2 trillion package, which is 10% of our GDP. And it has the ability, since it's through the Federal Reserve, to grow another $4 trillion and get bigger. Before we talk more about business, let's talk about what's in it for taxpayers like you and I. So right now, we'll be getting direct payments of $1,200 if you're a single filer, $2,400 if you're a joint filer, and those are capped at $75,000 or $150,000 if you're a joint filer, and also you'll get $500 per child. So a family of four would be looking at about $3,400. And if you file your taxes online and you choose the direct payment versus a check, they'll be coming in about 3 weeks or so. If you normally file your taxes and you get a refund, you get a check, it'll come in the form of checks. Also, if you're retired or have not been filing taxes, there's a form on the IRS's website that you can go in. It's essentially, actually, I think it just is a 1099. You'll fill that out, and then if you qualify, you'll obviously get these payments. So some of the other things that are in there for workers, expanded unemployment insurance. Most of the standard restrictions for unemployment, kind of the standard, if you're looking for a job, you can get it. All those other normal qualifiers are gone. If you're laid off because of COVID-19, you qualify. The federal government is also kicking in on top of whatever you get from your state. You'd get another $600 per week, and that will sunset on July 31st. Or you'll stop getting the benefit when you're called back to work. So, I'm sure you've heard from, a lot of politicians, talk about that it's not flipping a switch when we go back to work, it'll be turning a dial. So essentially when the dials turn to your job, when your boss is given the green light to reopen and you go back to work, those benefits will stop right then. So let's see what's in here for businesses. I'll first talk about what's in there for all businesses, and then I'll just look very briefly on what's in there for the larger businesses. And then we're going to spend the bulk of our time kind of on the bread and butter of this bill, which is what's in there for small businesses. And those things, I'll just reference them here because I'm going to reference them on future slides before I talk about them, and just so you kind of get what they are. One is the Paycheck Protection Program, or the PPP. That's the new program. That's the loan to grant program. And then there's the typical SBA economic injury disaster loans, or EIDL loans as they're called. And then also I'll talk a little bit of what was in phase 2 with the paid sick and family leave. So what's in there for all employees? Let me I got to move the, there we go. I had to move the picture of everybody because it was blocking my view. Anyways, so what you can do for all businesses is you can delay your payroll taxes or FICA taxes between now and the 1st of next year. And it's not a forgiveness, but it's more of a tax holiday that you'll be able to pay 50% back by the end of 2021 and the other 50 back by the end of 2022. However, if you take this route, you cannot get a PPP loan. Some other things that are in here for all businesses is that if you are operating on a loss for 2018, 19, or 20, you can carry that back another 5 years. You can also accelerate your A&T credits, and you can put a limit, or excuse me, you can increase your limit on your interest deductibility to 50% for 2020, or for 2019 and 2020. Also, the bottom, if you qualify for it, you'll know it. The Quip Fix, it was an error in the Tax Cuts and Jobs Act that's fixed here in this bill. And essentially it's property improvements for stores and restaurants and that kind of stuff. If you qualify for it, it's something that you probably already know about. Another thing that's in there for all businesses is the employee retention credit. And essentially what that is, if you had a partial shutdown or if you lost 50% of your gross revenue, you will qualify for this tax credit. Essentially what the credit is, it's a refundable tax credit of 50% of the wages paid up to $10,000 per worker. It's kind of a Washington way of saying it's a $5,000 tax credit. If you're a business that has more than 100 workers, you will get this to workers that you are still paying, but they're not working. They're sitting at home, but you're still paying them. If you're a business over 100, you will get that credit. If you're a business that has less than 100, you will get paid, or you will get the credit for all workers you're paying, whether they're working or not. If you go this route, all your workers will be paid. And this program also, if you take the PPP loan, this is another program that you would not qualify for. So it's kind of one or the other here. What's out there for the mid-sized to larger businesses is a $454 billion loan from the Treasury. You've probably heard in the media about getting money to the airlines. This is what this money is for. Also, if a larger business like a Delta or American, or name your large airline takes this, there's a restriction on using the money for stock buybacks, and you also can't give any bonuses to anyone in the C-suite. So there's no big, you can't use it for a big bonus paid to a CEO or CFO. Those are kind of some of the backstops on this bill. And you're likely to see new programs through the Federal Reserve that are going to help get this money to businesses. Now you've seen, a lot of businesses out there, ones that were struggling long before COVID, JCPenney's, Macy's, they're trying to figure out what they qualify for. So this is kind of where they would fit in here, but this is obviously not as clear and kind of, not the main focus. But now we will get to the main focus. Talk a little bit about the PPP. It's a $350 billion loan, or $349 billion loan. It's for businesses that are that have less than 500 workers. If you're a 501c3, self-employed, sole proprietor, and a independent contractor, you'll qualify. The loan, essentially what you do is you'll take an average of your monthly payroll and you'll multiply that by 2.5 months. And it's capped at 10 million, and that's essentially the loan you will get. It's supposed to cover 8 weeks of your pay, as well as kind of your keep the lights on expenses. So paying for healthcare for your workers and paying for electricity, gas, water, all that. That's what it's supposed to cover. But in order to get that grant, I actually just been seeing this the last day and a half, that is 75% of this loan should go directly towards payroll. If you're getting to the point that you're at a threshold that maybe only 60% of the loan you're using towards payroll, you're probably not going to have your loan turn into a grant. So that's kind of a new qualifier that I'm hearing about. It doesn't seem like it's etched in stone, but I've seen it now on multiple websites, and the SBA has referenced it, and then I've seen it a few other places. Anyways, what we do know now is that if you reduce the number of workers, or if you cut their pay by more than a quarter, you won't qualify. Now, obviously, this pandemic didn't start when this bill was passed last Friday. It's been going on much longer. So there's probably been a lot of businesses out there that have laid workers off. If they bring them back by June 30th and maintain them, they will still qualify to turn this loan into a grant. So, given the situation, if you've had the need to lay workers off, if you bring them back on payroll, you can still have your loan turn into a grant, which is good. And you can go to a section of our website, uschamber.com/SB loans. And this is a nice 4-page guide. It kind of breaks everything down. It shows the calculations in more layman's terms of what finding your average monthly payment and then multiplying it by 2.5. And so it kind of breaks it down nicely. I would recommend taking a look at that. And now look at the more typical SBA loans. I forgot to mention that the PP loans will be ran through your private lenders. So a Wells Fargo, a US Bank, or just a local bank in town will be the ones providing those loans. Just a note that the independent contractors, and I believe it was the sole proprietors, they won't be ready for loans until April 10th. The small businesses, actually, let me just double check on that, just so I give you guys the right information. So starting tomorrow, sole proprietors and small businesses can go to their bank and get a PPP loan. And the self-employed and independent contractors, there'll be loans available starting next Friday. Now, again, this is so very fluid, and I've heard a lot of mixed reports on if it's actually going to be ready tomorrow or if the other half is actually going to be ready by the 10th. This is the best information we've gotten from the SBA, but obviously it's very fluid, and the federal government, I guess you could say, is kind of working to their top ability here. So we'll kind of see where this is at. But talk more about the EIDL loans here. These loans have been offered by the SBA for years. If you've had a tornado come through your town and damage your storefront, you might have gotten one of these loans before. But if you're a small business or a nonprofit, including faith-based, with less than 500 workers, you can qualify for this. Also, just to note, if you haven't normally qualified for a SBA loan, you might still qualify here. If you have qualified before, then you're 10 times out of 10, yeah, you're probably going to qualify. But there's also situations where if you have not qualified, you still may qualify here. So it's definitely worth going on the SBA's website. They kind of have a calculator where you can go through and kind of put in, kind of the top line pieces of your business, and it'll tell you if you qualify. So don't think if you have 502 employees or whatever that you're totally out. There is kind of a calculator to figure out if you do qualify. This loan is up to $2 million. It'll be based on a 30-year term at a rate of 3.75% or 2.75% for the nonprofits. You can wait up to a year to pay these. However, the interest will still keep ringing up during that year. You don't need a personal guarantee if your loan is less than $200,000, and there's no collateral at all for a loan less than $25,000. Normally you'd have to, put up some form of, like real estate for a larger loan. For this loan, you don't have to. There's also a $10,000 emergency grant, or I've been kind of calling it a cash advance. And this you'll get through your private lender. It's essentially, it's supposed to get you through the waiting period from when you apply for a loan and when you actually get the loan. However, if you get this $10,000 grant and you get a PPP loan, the $10,000 will come off what you might qualify grant-wise for a PPP. But if you get an EIDL loan, or if all you need is the $10,000, the $10,000 will not have to be paid back, and you can generally get it within about 3 days. So talk about a couple of things that are in the phase 2 bill. This is more pointed at paid sick. Businesses with less than 500 workers are required to provide 10 days of paid sick leave if it's related to COVID-19. So the sick leave can be taken if you're ill, or if you're quarantined, or if you have to take care of a family member or a child that's out of school. The leave is paid at a rate, at their regular rate, but capped at $511 per day if you're taking it for yourself, and it's at a 2/3 rate with a maximum of $200 a day if you're paying it for a family member. This is 100% backed by the feds, and same with all those loans I talked about too. For the most part, banks they're gonna have to put some money up front, but all the loans that banks are putting out will be 100% backed by the feds, and same with this program as well. So this leave is on top of any leave that you might already give to your workers. If you already have a paid sick leave, this has to be provided on top. There is a situation that if you have less than 50 workers, that you may not have to provide the portion of the child who has to stay home because of a school closure. However, it's complicated. Department of Labor could probably help you to see if you qualify to not have to pay this portion, but you also have to prove that providing this could ruin the viability of your business. So it's kind of a complicated way out. It's possible, but doesn't seem very likely. Also, you don't have to provide this paid sick leave if your worker can sit at home and telework. So if they're able to do most of their job from home, then you don't have to provide this paid sick leave. Now we'll get to the family leave here. Kind of the same qualifications as the paid sick leave. Less than 500 workers, you have to give 10 weeks of paid family leave. And that's in order for a parent to take care of a child that's at home because of the school closing. The leave is paid at 2/3 of their regular rate, maxed out at $200 a day, and no more than $10,000 total. And kind of like the paid leave on top of it, this is on top of any other program that your business offers. Again, this is reimbursed 100% by the federal government. And there is that small exemption loophole you may qualify for, you may not. And again, that if they can telework, you don't have to provide family leave. It's only for if they're not able to work from home. So some other resources we have, uschamber.com, and then also our small business group, which we call CO. You can go to uschamber.com/CO, and that's I was actually just surfing it prior to being on this webinar here, and there's tons of different resources, and I definitely think it's worth checking out as well. Also, before I came on here, I did a little research about your Department of Labor. You guys have a well, I think most states have a state office that they can go to. Pull this up here. Can you see my website screen? Nope, just a PowerPoint. Okay, let me adjust this here. Oh, I think I gotta stop sharing. Hold on. All right, I'm gonna stop sharing and reshare, and it should come up. All right, can you see this now? So there's an office in Milwaukee, and then, oh no, sorry, just one in Milwaukee. Here's their phone number. So if you have questions about if you have to provide leave, or kind of what your business qualifies for or has to do, I would recommend giving this office a call. Also, their website, just their national website, has guidance on there and things. If you're a essential business, things that you can post in the break room, and some guidance there as well. Also, the SBA. I switched to the SBA page. Can you guys see that too, or do I have to go back? And you can?
Nope, we see it.
Okay. So you guys, I have an office in Milwaukee and Madison. You can probably just easier, just type in SBA, then put a space and WI. That's how I found it. And there's a phone number here that you can call if you got more questions about the EIDL loan, or if they have any more idea of when the private lenders are going to have the PPP loans ready. Feel free to give them a call. They also have, just on their regular website, just the regular SBA website, they have tons of resources to go to. And that's where, a lot of us get this information from. So highly recommend checking them out as well. Maybe now we take questions.
Absolutely. So one of the things before we get started with the questions is, it seems like if people take the PPP loans, it limits some of these other options. Is it really the PPP or the others? Is there really an either or?
You can get 2 loans. So let's say, like I said, this crisis didn't start last week, and you had to lay people off a couple of weeks ago, and you applied to get a EIDL loan and you got it. You can still get a PPP loan, but you can't double up on what you're paying for. So if you use the EIDL loan to pay your payroll, what you'll want to do is you'll want to go to your lender and get your EIDL loan refinanced into a PPP loan. Or if you use, EIDL loan to pay a debt bill, or, whatever the case may be, you can still get a PPP loan. You just can't get 2 loans to cover the same costs, essentially.
Got it. Makes sense.
Yeah.
And one of the things that we were also chatting about while the people were coming in is, so our restaurants and retailers sent people onto unemployment initially. Now there's some funding options available. And the challenge with PPP loans is that essentially they're forgivable if you bring people back on at the 9-week point. So you could end up taking out an 8-week loan, discovering come week 9 that you can't bring your employees back on, and that becomes a permanent loan for you. So there is a little bit of a risk factor that people should be aware of. Are you able to go into more detail on that, Ethan?
Yeah. Really good point. If you can't, let's say a couple, 8 or 7 or 8 weeks go by and you're getting towards the end of the loan and you're getting towards the end of June. If you have to lay off 1 or 2, it's what's nice about this grant is it's not all or none. You can get a portion of it paid back. I mean, there's obviously a risk when you're taking any sort of a loan, unless you know 100% you're going to get 100% of it back, obviously, or if you know you're going to have the capital to pay it off. But that being said, what's nice is it's not an all or one. So let's say you have 15 employees and by the end of it you have 13, you'll still get a portion of that back. I mean, obviously don't own a business, I work for the chamber, but if I was getting to the point of being very crunched for money, I would look at cutting pay a little bit. As long as you don't cut it more than 25%, you'll still get 100% of that grant into a loan. So it'd be easier to take, maybe 10% off the top for everybody. That way you'll still qualify to get your loan turned into a grant. So there are ways around it. It's complicated, and it's my understanding that the private lender is going to be in charge of kind of dictating who is going to have a loan and who's going to get a grant or a partial grant. That may be changed, but that was the most recent thing that I've seen. I mean, obviously, things have probably changed while we've been on this call. It's crazy, but
it is. A question from John Walrath. John, thanks for teaching yesterday, by the way, during the webinar. But your question is, are college students eligible for the 1,200?
Great question. Actually, what I've heard is that the child care credit, it's dependents under 17. So if they did not file taxes this year, or excuse me, in 2018 or in 2019, because they're going to look at, if you haven't filed for 2019, they're going to look at your 2018 return. But I've heard that there's a few members of Congress, including the one that represents me here in the Twin Cities, is that she is going to put in for a amendment when they do, well, when I say when they do the next phase, I'm assuming they will. There's been so much talks about it that she wants to get that moved up to age 24. So that would cover all college students, whether they filed taxes in 2019 or 2018 or not. So currently there's probably some college students that won't be getting it, but I would assume if they had filed taxes in 18 or 19 of some sort, if they had any, sort of income, they worked at the, Starbucks, by campus, that they should be getting it. But there is a movement to get it to all, to get them that $1,200 from that 17 to age 24.
A question from Marianne Torkelson, which gets to how the 100 employees is counted. Is that full-time? Is that FTE? How does that calculation work?
Yeah.
Okay, so FTEs.
Yes.
Question. Oh, actually, it's clarification from Marco. So,
if more guidance comes out, that may change. I mean, this, again, it's kind of a minute by minute. If you're going for that employee retention credit, yes, I believe FT. Yeah.
Okay. Marcos was just clarifying who can lend. Local banks or credit unions. SBA approved is one of the criteria. Question from Scott Joseph. I thought the $10,000 grant came directly from the SBA, not lenders. Please confirm.
Good question. I've seen, again, both. I think lenders will take it over once PPP starts. But right now, it may come through the SBA. I would recommend going on the SBA's website and following their, guidance on that. Again, I've heard a lot of mixed messages on that, and I'm sorry not to have a more confirmed answer, because I just don't like giving people maybe information. But it's my understanding that private lenders will take it over. But if you're looking to just get the cash advance or do a idle loan right now, I would inquire during the application process about getting that through through the SBA.
Okay. The next question is about calculating payroll. So what type of benefits can count towards payroll? Does that include dental, life, vision?
Yep. Any sort of healthcare, or any sort of benefit that you provide that's considered compensation, that's part of it. Yes.
And then is that funding as a lump sum, or is it a draw?
I think it's a lump sum, but I don't know for sure. I would assume a lump sum.
Okay, so talk to your lending institution on that one.
Yeah.
Okay, this one, I'm just gonna have to read these. My company has an owner above 20% who also owns that much in a couple of other companies. Since we are affiliated companies, do we add up all employees in all affiliated companies to see if they qualify for under 500?
I believe, and from what I've heard, is that it's normally SBA would qualify 500 as the whole, the parent company on down. Now it's physical, it's a physical building. If you have less than 500 people working in a physical structure, that is the 500 or less qualifier here. It's no longer if you're a restaurateur in town and you own maybe a dozen restaurants. It's not 500 total. It's at each physical building you have less than 500, which is different. It's not normally like that.
Can you clarify if only payroll look back is used, or if rent, mortgage, interest / utilities look back are also used to determine the amount of the PPP?
Yeah, so it's there to cover, mortgage, interest, rent, gas, electric, all that. But you don't want those payments to exceed 25% of your PPP loan. You want to have 75 on just payroll. Again, I don't know if that's official guidance, but I'm starting to see it pop up in a lot of places.
Right.
And just to kind of zoom way out here, it's an 880-page bill. The whole goal of the bill is to get workers money through whoever they work for, versus skipping over, businesses. Now they are doing that too with the $1,200 and $2,400 payments. But the idea, and if you could, bring this bill from 880 pages down to a couple words, it's funneling money through businesses so people get their normal, compensation. It's not like in 2008 where that we know people are going to be out of job, for a year or 18 months or 2 years or whatever the case is. The thought process in Washington is that this will improve sooner rather than later. Now we'll see, but that was the thinking when they passed this last Friday.
Okay, so I think this is a clarifying comment from Marianne, who's a local lender.
Mm-hmm.
She says regarding the SBA loans for the EIDL, which is Economic Injury Disaster Loan,
Mm-hmm.
they apply directly with SBA. For the PPP, they would apply with their local lender.
Correct.
And not all lenders may choose to work with this program. And this gets to Ethan, what I had heard earlier. Some of the lenders are seeing this as a little too risky.
Mm-hmm.
And just so some of you are aware, they're outsourcing that lending because they don't want to take that piece on. So this is reinforcing that comment as well. So
Sure.
the point is, don't just assume that your financial institution is
Right.
going to do it. So just something to be aware of.
Right.
Liz, filter, under the scope of loan forgiveness, the calculation appears to include average FTE, and the difference between 630 year-to-date FTE, sorry, some of these are easier to read than to read out loud. And the 2019 pay period outlined. Will we be penalized for individuals who are not laid off, but are choosing to self-isolate and not be present at work, even when payroll exceeds the FTE difference?
Whew.
Okay,
So
so
I'm gonna see if I can figure this out. So it's,
Yep.
it's someone who has voluntarily decided that they're just going to isolate and they're leaving the workforce. Is that?
yeah,
what
hey,
you're doing with us?
Liz, do you
Yep.
want to just unmute? And there you go. I see you did it. Awesome. Go ahead, Liz.
Okay, so it looks like based on the loan forgiveness estimation calculation, it takes into account the difference in the full-time equivalency as of at 6/30 as compared to the period in 2019, and it uses that within the calculation and takes the lesser of those amounts, and that calculation is what pulls into the total percentage forgiveness. However, even if salaries had increased in that period during 2020 because of having to replace some of those with limited term employees or whatever it might be, the full-time equivalency difference is going to reflect negatively in terms of the loan percentage because people are staying home even though they're not laid off, and it's not at the the employer at the fault of the employer.
Right.
So how is that being considered, or
Yeah. So it's, I haven't seen guidance on it, exactly how, people who have chosen to self-quarantine and they're just staying home and they're doing that on their own, they haven't been laid off, if they wanted to work, they could still work, but they've kind of self-laid them, or they've kind of laid themselves off. Now, if you get a PPP loan and you're looking to go from the loan to the grant, it seems like it's going to be something that you're going to have to work out with the lender, since they're going to be in charge of kind of determining what portion gets to go from the loan into the grant. I would assume, just, trying to be reasonable on it, that if they're choosing to stay home, and there's a form of proof of that, and then in turn you're not paying them, I don't think, again, I'm not 100% on this, but I don't think it would be counted against your opportunity to take your loan into a grant. From what I've seen of the guidance, it would have to be an action by you. You said to them, we can't have you here, we can't afford to pay you, or whatever the circumstance is. If they choose to leave on their own, that, from my knowledge, what I've seen, that shouldn't count towards you not getting your loan towards a grant. But that's something that when you are going through the process, with your lender, I would bring that up to them, right at the start. Say, Sally has said that she's going to stay home through this, and that this is her choice, and they'll probably have a better idea and to more officially document that situation.
thank you.
So this is a great one. This has to do with people that are paid on commission. So can a corporation use 1099 commissions paid to salespeople to calculate an amount for the loan program? What rate and term is that loan program for?
Yeah, so what they would do is they would want to figure out, now again, it's like a waitress or a hairdresser, that commission and tips are not consistent. You can have better months, you can have worse months. So what you'll do when you're finding the average of their salary is it'll be a monthly average of what either their tip is, and adding that into their base salary. So it's it's not their high point, it's not their low point. It's going to be an average of per month, they make $500 in tips or $500 in a sales commission, whatever the case may be. You'll be finding an average on that and putting that on top of their base salary.
Great. And Mary Ann pointed out that the PPP program, their loan application, sample loan application is on the SBA website. And one of the resources we added as well, the US Chamber has kind of a walkthrough how to apply for these funds through the SBA. That's a great resource as well to say, this is what you need to have ready to go. I think I'm at the last question from Paul. Is there a risk that funding will be maxed out? Will the funding run out on the PPP?
At first I heard that there was not a risk, but now I'm seeing, work now to get all your tax, well, not tax information, but to get all of your loan information, kind of get your, ducks in a row right now. And I think why I'm hearing more about making sure you're spending 75% of it on payroll is because they're realizing just from, calculating how many businesses are going to go this route, that it's going to max out soon. You have until June 30th to get this loan. However, the money may be out by then. So I would, again, I hate the idea of these, bankers, sitting at home on their couch, essentially getting, virtually bum rushed. But the quicker you can get to your lender, probably the better.
Yes, and for sure on the SBA.
Yeah.
I've heard that one you get to very quickly. So there's a few questions that we've been fielding in terms of employees. You kind of touched on it earlier. Employees not wanting to come back to work out of fear that of the virus. And so what are the options for the employers when you want them to come back and they're not willing?
Right. So there'll be a guidance that will go to businesses. I'm sure there'll be some sort of a form that, again, once that dial comes back on and you're trying to get your workers back, is that, you'll send whatever is sort of paperwork that, Ethan Hellier should come back to work now, actually it'll probably be online and that'll be sent in. And as soon as they are called back, there's not a defined benefit. When you're called back, those benefits are going to stop. Like there's not, you get this for 6 weeks, whether you're called back or not. When you're called back, you have, I guess you don't technically have to go back to work. You could quit, but you're not going to get that benefit.
Sure. Sorry, there were 3 more questions that came in here. Will the SBA be ready tomorrow morning for the influx of PPP applications? Because that is the first round. My understanding is that the guidelines for processing the applications has not been approved to have not been provided to financial institutions yet.
The Treasury says yes. Some lenders have said no. I mean, that's it's so in flux right now. I can't give a definite answer. Treasury thinks yes. I mean, maybe there'll be some larger banks that are ready. I just happened to bank with Wells Fargo, and I got an email from them about 4 or 5 nights ago. That was just, and I don't own a business or anything, but they were laying out, everything that they're doing for COVID, and they talked about, some of the loan programs. So I'd assume if they were aware of it then and kind of pushing it out to people who bank with them, that, a Wells Fargo or a larger bank is going to be ready. Maybe not. Maybe they've, realized they're not ready to go. But the Treasury is hoping that, when the clock turns, Friday the 3rd, that they're going to be ready to go. But I don't know.
Yes, and I think I've heard it twice now, both from SBA and our state, our WEDC, that they have learned not to put forms online because it crashes the websites. So both of those entities had issues. And so hopefully that lesson got learned this time around. And so there's usually a download and then an upload so that's not overwhelming the system. Melissa, good to see you again. It says, the question is determination of max compensation. So if someone grosses under the 100,000, but benefits put them over, how does that factor in?
You'll just have to calculate, their benefits, and then, take $100,000, calculate what, their benefits are worth, subtract that, and then add on, whatever the difference is to get them, under 100,000. But yeah, it's the benefit for businesses as far as getting it turned from a loan to a grant is capped at $100,000.
Okay, got it. From Marcos, as with many financials, there are applications pre-filled out and ready to submit, however, need the direction to submit. So I think it's more just the comment of clear directions for how to send the
Right.
businesses through. Yeah.
I saw the app today, or at least, what was out there, but it's, kind of like you said, it's a guidance of what, of when the app comes in, of what the private lender has to do between them getting the loan and giving the loan money out to the business. But yeah, I mean, from what I've seen, the actual application is ready to go. Now it's going to be, what's the process like from when the lender gets it to when the business gets the money.
Yep, absolutely. Okay, any further questions out there? I've hit them all from the chat. Anybody going once? Going twice? Oh, somebody submitted. See, it's like never-ending counting. The application has significant issues to be addressed for lenders from liability issues. Sorry, Mike, your comment's a little bit garbled, but it says for lenders from liability issues being extended to lenders. So I think that's more just a comment that there's some liability in there for the lenders.
Sure. Yeah. Now they did lay out an actual process of what, if you're a lender and you lend the certain loan, that you get a percent of it, the lender does, and then the person processing the loan gets a smaller percent of that percent. But again, it's going to vary from bank to bank, and I'm not going to make a blanketed statement on what every lender is going to get. But it's my understanding and intent of the bill is that banks will be covered here, and that this should keep them relatively flush. Now, again, that might not be the case from every bank to every bank, but that is certainly the intent of the bill.
Okay, and Stephanie, you did ask about how to count FTEs, full-time, part-time, and on-call. So the on-call is the only complication in there.
Yeah. Was that for the retention credit?
Yes, that's correct.
Okay. Yeah. So are you like kind of right at that line of 100?
No, I'm actually under 100. I guess you look at the application for the PPP, it talks about number of jobs. And yet, how do you count number of jobs, but how do you also equate that to FTE, particularly when you have, again, the on-call employees, and where do their hours fit? How do you count that so that you're also showing that you're maintaining a similar number of positions?
Right. So are your on-call folks, are they full-time?
No, they are not. They are truly on call when we need them.
Okay, so truly, okay, gotcha.
Their hours will massively fluctuate from one day to the next.
Gotcha. I would assume then that during this process that they would be, figured in as part-time.
Okay. So
That
do
would,
you
that would,
or their hours?
pardon?
There's multiple ways to calculate FTE. Do you count their body, or do you count their hours and divide by 40 to get like an average number of hours per week that they work?
I would have to look at the guidance on that again. I'm not 100% sure. I don't want to lead you in the wrong
Direction. Okay.
Okay, any further questions out there? Well, great. I wish you.
Vicky, I threw one out there.
Did you?
Sorry.
Okay, go ahead. Oh, yeah. I see
Sorry.
it now. Yeah, go.
Okay, mine was just with regards to the application, number of employees. Sorry if you've already answered this. I just stepped up for a second, but it indicates number of employees. So does that mean how many W-2s are submitted at the end of the year for total people employed, or average number per pay period? Because that can fluctuate obviously in some industries. So how should
It'll be
that
the number that you had now. So if you laid someone off prior to February 15th, that's kind of where the bill's benefit period stops. It's It's the number of W-2s you would have now, or, you know, the number of workers you have right now.
So current employees on the date of, during the date of application.
Yes.
Thank you.
Yep.
And then Maggie was great and added your email into the chat area there. So anybody, if you want to email Ethan any of those unanswered questions, it gives him an easy way to get back to you with an answer. So thanks, Maggie. Okay, I'm not going to count this time because you're all going to come in at 3 if I count again. So many, many thanks to you, Ethan, for your time. Thank you again for being that great resource for our chamber and for all the businesses that you guys represent on a national level. And I wish you all the very best. Tomorrow, Maggie, correct me if I'm wrong, but tomorrow is actually our county health department, correct? Yes, at 3 o'clock. So the number one question that everybody's been asking is, what happens when you have a positive, an employee who tests positive for COVID-19? We did put a sheet on there on our website under resources, but obviously this is an opportunity to hear from our county health department as to how they are reacting, so to speak. So, and working with companies. So we hope to see you tomorrow. And in the meantime, I wish you all the best and to be well. Have a great rest of your day.
Thank you.
Ethan. Bye.
Bye.
Thank you.